Hope this video finds all of you fine. We know that money laundering and terrorist financing are done through multiple typologies and in many diversities. Banks and financial institutions need to have expertise and technologies available to cope up with many difficult types of money laundering transactions. Have you ever heard the term smurfing and immediately thought of those little blue cartoon characters? Well, in the world of finance, smurfing is something far less innocent. It's a classic money laundering technique, and understanding it is key to spotting financial crime. Today, we're going to dive deep into what smurfing is, how it works, and explore some of its tricky variations, including the bizarrely named Cuckoo Smurfing. So, what exactly is smurfing? At its core, smurfing, also known as structuring, is the act of breaking down a large sum of illicit cash into multiple smaller, less suspicious amounts. Why do criminals do this? It's all about avoiding detection. In many countries, financial institutions like banks are legally required to report cash transactions above a certain threshold to the authorities. For example, in the United States, this reporting threshold is $10,000. Different countries set different threshold of transactions for reporting and detection. Any cash deposit, withdrawal, or exchange over this amount triggers a currency transaction report, or CTR, which is filed with the Financial Crimes Enforcement Network, also known as FinCEN. These reports are a huge red flag for law enforcement. They signal that a large amount of cash is moving, which could be linked to illegal activities, like drug trafficking, fraud, or terrorism financing. Criminals know this. So, to get their dirty money into the legitimate financial system without setting off alarms, they use smurfs. A smurf is a person recruited to make these small deposits. The criminal mastermind or the controller gives the smurfs the cash, and they go to various banks or even different branches of the same bank to deposit amounts just under the reporting limit. Let's walk through a simple example. Imagine a criminal organization has $100,000 in cash from illegal drug sales. Depositing this lump sum would instantly trigger a CTR. So the controller hires 10 smurfs. Each smurf is given $10,000. They are instructed to deposit $9,900 into different bank accounts. This way, no single transaction breaches the $10,000 threshold. The smurfs might visit 10 different banks, or even make multiple deposits over several days to further obscure the pattern, once the money is in the banking system. It can be easily moved around electronically, making it much harder to trace back to its illegal source. The smurfs are usually paid a commission for their services, often a percentage of the money they handle. This practice isn't just a clever trick. It's a serious crime. Financial institutions are trained to look for signs of smurfing. Tellers and compliance officers watch out for customers who frequently make cash deposits just below the reporting threshold, use multiple accounts, or seem nervous and evasive. Banks use sophisticated software to analyze transaction patterns and flag suspicious activity. If a bank suspects structuring, it is obligated to file a Suspicious Activity Report, or SAR, regardless of the transaction amount. Now let's look at some different typologies or variations of smurfing. The classic model we just discussed is the most common, but criminals are always evolving their methods. One variation is reverse smurfing. Instead of depositing cash, this involves withdrawing it. Terrorist organizations, for instance, might have funds in a legitimate-looking bank account and need to distribute cash to their operatives on the ground without leaving a clear trail. They'll use a network of individuals to make multiple small cash withdrawals from ATMs or tellers, again staying below any reporting or internal monitoring thresholds. This makes it difficult to connect the dispersed funds back to the central organization. Another typology involves using money services businesses, or MSBs. These include currency exchanges and money transfer services. Smurfs might visit multiple MSBs to buy monetary instruments like money orders or prepaid debit cards, each purchased with cash amounts below the reporting limit. These instruments can then be sent anywhere in the world or deposited into bank accounts, effectively cleaning the money. This brings us to one of the most complex and interesting variations, Cuckoo Smurfing. It sounds strange, but it's named after the cuckoo bird, which lays its eggs in other birds' nests. In this scheme, a criminal organization exploits the bank accounts of innocent, unsuspecting third parties. Here's how it works. Imagine someone in Australia, let's call her Sarah, is expecting a legitimate payment of $30,000 from her family overseas for a down payment on a house. Meanwhile, a criminal syndicate in that same overseas country needs to launder $30,000 of its illicit cash. The syndicate finds out about Sarah's expected transfer, perhaps through a corrupt money transfer agent who is part of their network. Instead of the money transfer business sending the legitimate funds to Sarah, the criminal syndicate steps in. They instruct one of their local associates in Australia to deposit their $30,000 of dirty cash into Sarah's bank account. This is usually done through a series of small, structured cash deposits to avoid suspicion, just like classic smurfing. So Sarah receives her money as expected. From her perspective, everything looks normal. She sees $30,000 in her account and assumes it came from the official money transfer service. But here's the cuckoo part. The legitimate funds that were supposed to go to Sarah from overseas never actually leave that country. Instead, the corrupt money transfer agent gives that clean money to the criminal syndicate over there. In effect, the criminals have swapped their dirty cash in Australia for clean cash overseas. Sarah's bank account was the nest where the criminals laid their egg, the illicit funds. She is the unsuspecting victim who has unwittingly helped launder the money. Cuckoo smurfing is incredibly difficult to detect because the receiving party, Sarah, is completely innocent and has a legitimate reason to be receiving the funds. The deposits into her account might be flagged for structuring, but when the bank investigates and contacts Sarah, she will provide a perfectly valid explanation for the incoming money. She'll say, "Yes, I was expecting that money from my family." She has the paperwork to prove it. This makes it a highly effective technique for criminals. The key vulnerability in cuckoo smurfing often lies with the money services businesses or complicit financial professionals who facilitate this swap. Law enforcement and regulatory bodies like Australia's AUSTRAC have issued specific guidance to banks to help them identify potential cuckoo smurfing activity. Red flags include a customer's account receiving a series of structured cash deposits from unknown third parties, especially when the customer was expecting an international wire transfer. Another red flag is when the geographic locations of the cash deposits don't make sense. For example, if Sarah lives in Sydney but the cash deposits are being made in Perth and Melbourne by people she does not know, that's highly suspicious. So, to recap, smurfing is the illegal practice of structuring large cash transactions into smaller ones to evade detection and reporting requirements. It's a cornerstone of money laundering. Classic smurfing involves using multiple people to make deposits under the reporting threshold. Variations include reverse smurfing for cash withdrawals and cuckoo smurfing, a sophisticated method that uses the bank accounts of innocent people to swap dirty money for clean money. Combating smurfing requires a multi-layered approach. It involves strict regulations, vigilant financial institutions, advanced data analytics to spot patterns, and international cooperation to track funds across borders. For us, as individuals, it's a reminder to be cautious. Never agree to deposit or transfer money for someone you don't know, especially if they offer you a commission. You could be acting as a smurf, knowingly or not. and the legal consequences are severe. Protecting the integrity of our financial system is a shared responsibility. Thank you for watching. If you found this video informative, please give it a thumbs up, subscribe to our channel, and hit that notification bell so you do not miss our next deep dive into the fascinating world of finance and crime. Stay curious and stay safe. Hope to meet you with new topics soon.